Google is one of the most powerful companies in the world, and its stock is down 40% from all-time highs. It's the largest individual position in my portfolio, and I've consistently been dollar cost averaging into it. In this video, we'll be answering the question, is Google a buy? We'll be looking at how the company is positioning themselves for growth over the next 10 years, and we'll be looking at their financials to come up with a price to buy the stock. First, let's talk about Google's most recent earnings report. The biggest headline with the third quarter earnings report was Google only growing revenues at 6% year over year. Now, that is true, 6% growth isn't great, but take a look at last year's growth. It was up 41% year over year. So they're going up against very tough comparables, and that's mainly due to the pandemic. If we scroll down here, we can see the breakdown of the revenue growth by each segment. So the highlighted numbers here compare Google's cloud revenue for the third quarter in 2021 versus the third quarter in 2022. We can see that it was up 38% year over year. So for me, this really was the bright spot of the earnings report. Cloud in general as an industry is projected to grow at a 15% CAGR till 2030, and eventually most companies will be running on cloud, right? I mean, it's safer and it's more cost effective over the long term. So overall, the report was nothing crazy. The legacy segments are slowing down, but the cloud segments are growing rapidly. So this brings us to the next point. If Google's legacy business is slowing down, what can it do to continue growing? One of the things Google is doing is heavily investing in growing economies. One of those growing economies is Africa. Sundar Pichai, the CEO of Google, announced that they'll be investing $1 billion in Africa over the next few years. I'm very excited for Africa's growth over the next decade, and I think Google is positioning themselves to be at the forefront of that growth. Another region that Google is heavily investing into is the Asia-Pacific region. This includes countries like Malaysia, Indonesia, Vietnam, and Thailand. These are some of the fastest growing economies in the world, so it's definitely somewhere you want to be if you're Google. Finally, in 2020, Google announced that it will be investing $10 billion in India over the next 5 years. India has one of the fastest growing economies in the world, and it's actually projected to overtake the US in terms of nominal GDP over the next 10 to 15 years. So now that we know that Google is heavily investing into the fastest growing economies like India, South Asia, and Africa, we need to know if the people in these areas are likely to adopt Google's products and services. In fact, almost everywhere outside of North America, Android is the preferred phone. This is for many reasons, but the biggest reason in my opinion is because Samsung offers a wide variety of affordable phones, and other regions in the world simply don't want or can't afford to pay thousands of dollars for iPhone. So, the first way Google is looking to grow, as we just mentioned, is by investing in growing economies all over the world. The second way it's looking to grow is by investing in their other segments. This brings us to the next point. Google Cloud grew 38% year over year, and it's projected to grow at a 15% CAGR over the next 10 years. YouTube Music and YouTube Premium has over 80 million paid subscribers, and the music streaming industry is projected to also grow at a 15% CAGR over the next 10 years. YouTube has also invested over $100 million in 2022 into YouTube Shorts and the YouTube Shorts Fund, so they're also looking to compete with TikTok from that front. So when you start having the fastest growing economies in the world, then they're starting to get more and more access to the internet. They start buying more Android phones, using the Google operating system, using YouTube Premium, Google Wallet, YouTube Music, Google Drive, and eventually Google Cloud. It starts to look like Google can really entrench themselves into the lives of everyone in the world. So now that we've talked about how Google is planning to grow over the next 10 years, let's take a look at the company's fundamentals and their valuations. One thing to note is that not every good company is a good investment. Valuations are extremely important. I mean, look at Tesla, for example. Tesla's a great company, but I still wouldn't touch it. Even after it's being down almost 50% this year, I still think Tesla's overvalued. So just because it's a good company and they have good cars, doesn't mean it'll make for a good investment. So for this segment, I'm going to be using Stock Unlock to analyze Google. The first thing we'll take a look at is the balance sheet. Google has one of the best balance sheets on the market. We can see that their current ratio is 2.52. Which means they have 2 times more current assets than current liabilities. They're also buying back shares, which is nice to see, and they have enough cash on hand to pay off all their debt. So that essentially means they're never going bankrupt. This next table shows us Google's profitability. As we know, software businesses have incredibly high margins. Gross margins of 56%, free cash flow margin of 22%, which is a bit on the lower side, and we'll take a look at that in a second. Finally, let's take a look at their returns. The return on invested capital, which is ROIC, means how much return can the company make with the capital that's being invested. Google's ROIC is sitting at 27%, which is very high. And the return on equity is also at 26%, which is very nice to see as well. Now let's move on to valuation. The million-dollar question, is Google a buy? From a price to operating free cash flow perspective, Google has never traded below 12. The lowest it's ever gotten to in terms of price to operating cash flow were the bottom of the 2008 crash and the bottom of the 2020 crash. Today, it's trading at a level lower than both of those. And from a PE perspective, price to earnings, Google is also sitting at the lowest it's been. It's sitting at around 17, and the only times it's come close to that were in 2008 and 2012, and both of those times presented us with great buying opportunities. Finally, I'm going to be running a DCF to find out which price I will be buying more Google shares. A DCF, a discounted cash flow, allows us to put in assumptions into a glorified Excel sheet, and then it gives us a fair value. For our first calculation, we'll be using the operating cash flow. We're projecting for the next 5 years, so we'll be assuming at an 8% growth rate in operating cash flow, which isn't too conservative, nor is it too aggressive, in my opinion. I think that's that sweet spot, 8% growth, and we'll assume a modest 1% share buyback since they have been buying back shares historically, and we'll assume a price to operating cash flow of 15, which is a bit less than the average they've been trading for. Finally, with a 10% discount rate, which is essentially our margin of safety. And using these assumptions, we come up with a fair value of 103. This means that if you believe all these assumptions on the right, then Google is a buy under $103. My next set of assumptions will be a little more conservative. We'll be using the price to free cash flow for this. So if we use the same assumptions we used for operating cash flow, but for free cash flow, we'll get a lower fair value. This is because, as we mentioned before, Google invested a lot of money into their growth in 2022, which made their free cash flow margins drop. So if we assume an 8% growth, a negative 1% share outstanding growth, and a price ratio of 15 with a discount rate of 10, we get to a fair value of 69. So my buy point is really anywhere between that 69 and the 103. So call it 80 to 85 is really where I'm looking to dollar cost average more into Google. Thank you guys for watching. Don't forget to like and subscribe. Peace.